Eric Muathe from Muathe.com with a quick review for VRX, which is down about 40% today. And we can see that this makes a lot of sense because right now we are looking at the daily RSI moving below 30.9, and that is a characteristic of what happens when a stock slashes below 30.9 on any time frame. Here we are looking at the daily, and of course we are seeing this huge plunge. Now if you go to the big picture, you can see that on the monthly chart the stock gave us a short-term sell signal here, and that's why we had highlighted this one as a short about 2-3 months ago. Once it moved above 89.96, which was this previous monthly closing low for 2015. So once it moved below that, it triggered a short, and now we are seeing the reason why that was a good idea. We can also see that at the time when it was moving below 89.96, if you take a look at the MACDs and the RSIs, you can see here the RSI moved to fresh 3-year lows, which is the minimum requirement, and we can also see here that the MACDs were also moving to 3-year lows, again the minimum requirement. And keep in mind, we have both MACDs trading below zero, which is a sign of a stock that is fully looking to go down. There's also another consideration here, which is the fact that on the monthly the stock is now moving below 38.2, and as I always say, whenever a stock moves below 38.2 for the first time in 3 years on its monthly chart, it tends to behave as if it is crashing, which is exactly what is going on right now. Very consistent. Now keep in mind, there's a likelihood and possibility that this could actually see lower prices if and when it moves below 30.9 on the monthly. So that's a trap here. Right now trading at 32. If it slides back below 30.9 on its monthly chart, expect even lower prices. Now keep in mind, if you go back a couple of years, go back to 2008, we can clearly see here, since 30.9 is pretty much inverse of 69.1, we can see that what happens when the stock moves above 69.1, it did here. You had a nice move since then. It recaptured 69.1 here for this breakout. Again, we see above 69.1 began a nice move here. We had movement above 69.1, which again began this nice move. Now we are looking at the potential for the exact opposite, which is that if the stock moves below 30.9, that could suggest that it could run into trouble and probably even see lower prices. In fact, if you take a look at the long-term monthly chart, the stock might be entering a new phase. And let me explain that. You can see here that there was a breakout on hindsight. This breakout and the RSI began this nice move late 08, early 09. The stock would move from, let's call it, in the $7, $8, $6 area, and the stock would go on to trade as high as 260 thereabouts. So we know that this is where the movement began, right here on hindsight, and we can use that information for future reference. And it seems like right now there's a slight change in the behavior. This was supposed to be where the stock would find support, and you can see it tried to hold support in the last couple of months here and failed, and right now we are trading below that green line. The suggestion here is that now we have entered a very bearish phase in this stock. So what has been and what was supposed to be support, which is the green line, is right now becoming a problem because the stock cannot trade above that and is not trading above that. So support has now become resistance, as you can see, and now the stock seemingly is entering a new phase, which in my opinion looks to be bearish. So again, trading below this line here, which was supposed to be support, is now a sign of a stock that has entered a very bearish phase in its trading history. Now you go to the daily, and we can see that over the last couple of weeks, in fact for 2016, the stock has been rejected with uniform activity at the 50 line on the daily RSI. So the 50 level has become resistance with uniform activity rejection, and that is a sign of a stock that has bearish tendencies. So you can see here again rejection at the 50 RSI level on the daily with uniform action. That was a sign of a stock that was not acting well, and of course we can see the end result of that. Keep in mind, you can see here that the break off the highs on the RSI here, that break brought the stock off the highs here in the 250s, 260s, and so if we draw a line from there, we can see that the stock did come back and challenge that line. So we can draw a line from here, should be something like that, and the red line so happens to be at about 61.8. so that's a resistance line that we need to respect. And of course we can see that we did try and move above this line, but we were rejected twice with uniform activity, double top rejection, which gave us the highs here in the 120s in late December. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. EACS.